Refinancing is a very personal experience. Everyone's situation is different, therefore a refinance is going to be different for everyone. People refinance for a multitude of reasons. The biggest being lowering their monthly payment. People can save hundreds of dollars a month with very little out of pocket in order to refinance. What we see with borrowers is a few specific reasons for refinancing. The biggest being lowering your monthly payment. Some other things is shortening the term of your loan or taking cash out of your property. When it comes to shortening the term of your loan, most people are on a 30-year amortization or a 30-year mortgage period. What they'll do is move that to a 15-year, which may increase your monthly payment slightly because you're accelerating the amount of principal you're paying over a short period of time. That, yes, will increase your monthly payment, but will save you hundreds of thousands of dollars over that 15-year period. So that's a great reason to refinance. The other thing is, with interest rates as low as they've been, people can take some money out and pay off other monthly debts. While your mortgage payment might go up slightly, you may be able to pay off a credit card or a car loan with an exorbitant interest rate. This is going to save you a ton of money out of your monthly expenses, not just your mortgage payment. It's very important when looking at your finances to look at your entire monthly obligations, not just your mortgage payment, car payment, but everything as a whole. Because when you're looking at possibly doing a cash out refinance, yes, it may increase your monthly payment on your mortgage. However, if you can pay off a car loan, credit card, or student loan that has a significantly higher interest rate, you may save a tremendous amount of money on your entire monthly balance sheet. Refinancing costs vary from state to state, county to county, person to person even, depending on the type of loan you're doing, depending on where your property is located, and even possibly what type of property you're in. For example, in Illinois, on a typical refinance, it costs about $2,000. Those are broken up between lender fees, appraisal fees, title fees, recording fees. Other markets, such as Florida or New York, have a city or state refinance tax or mortgage tax associated with it. So that drastically increases the costs. For myself, I'm able to waive costs a lot of times for my clients by doing what's known as a no-cost refinance. You might see your rate go up 1/8 to 1/4%. That extra revenue that's generated by the slightly higher interest rate is used to pay all of the costs associated with your loan. That way your break-even point on a refinance is instantaneous. Some of the biggest mistakes we see people make is not having an idea of what their home is worth when they start refinancing. There's many tools out there such as Trulia, Realtor.com, where you can get a grasp of what your property is going to appraise for. It won't be the exact amount that when the mortgage professional orders an appraisal, but it gives you a good idea and at least is a very solid starting point. You can also talk to local realtors in your area to find out what properties are selling for around you. We want to look at things within the last 6 months. It's very common for people to remember what properties are worth in their absolute peak, but it's really important to find out what it's worth today. Some of the other pitfalls we see is people listing their property for sale. The property can't be listed for sale in order to refinance. You actually have to take it off of the market in order for a bank to lend you new money on your property.